Welcome back to Alpha Recap, your after-hours market breakdown from stockalpha.ai. Great to have you with us. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, yeah, glad you're here. We're coming to you after the close with a lot to unpack from a pretty mixed day on the tape.
So, quick headline numbers to set the stage. The S&P 500 finished the day up about 0.4%. The Nasdaq 100 climbed about 0.9%, and the Russell 2000 ended down about 0.5%.
Nice summary. Big cap tech led, small caps lagged. That split is the story of the session.
Yeah, and what really stands out here is how leadership was concentrated, but not total. There were pockets of rotation into defensives and materials, too.
Right. Tech and semiconductors rallied on industry headlines and earnings previews, while banks and cannabis took hits.
Let's dig into tech first. Chips and memory names got a boost after some TSM headlines and previews around memory demand. Analysts were talking about capacity and demand signals, and that pushed sentiment across the supply chain.
Micron was squarely on the radar as well. The previews put memory back in focus, and traders priced in stronger demand expectations. So chip-related names helped lift the Nasdaq 100.
And the way to think about that, in plain terms, is when big manufacturers hint at more demand, the parts makers and software partners start to look more valuable in the near term.
Exactly. It's like hearing a retailer say holiday sales were stronger. Suppliers get a bump too.
Switching gears, financials were under pressure. Banks pulled back on concerns around credit growth and margin compression.
And that pressure on banks weighed especially on smaller companies, which is one reason the Russell 2000 lagged the larger indexes.
Not a great day for banking names, and we saw some defensive flows because of it.
Speaking of defensives, utilities and some real estate investment trusts picked up flows. Investors rotated into yield and stability. Renewables and grid tech headlines helped the utility sector in particular.
I mean, when you step back and look at this, it was a mix of growth and safety buying. Tech on one side, income-oriented names on the other.
There was also notable weakness in the cannabis group after new regulatory developments introduced fresh uncertainty. Policy stories still move those stocks a lot.
Yeah, cannabis volatility is basically built on policy expectations. Today's updates pushed that risk premium higher, and shares pulled back.
Meanwhile, materials and mining names built momentum into the close. Some rotation into cyclicals showed up there.
So overall, it felt like selective broadening. Large cap tech leading, but some real rotation into materials, utilities, and select REITs.
Which makes the day harder to label as just risk on or risk off. It wasn't one or the other.
Totally. Quick reactions, short takes.
Tech momentum, big move.
Banks lagging.
Utilities catching flows.
Those bite-sized summaries work.
They do. Okay, let's talk about the macro backdrop and what that means for these moves.
Markets were highly tuned to upcoming inflation and employment data. There were no Fed surprises today, but everyone is watching the data calendar.
Analysts keep saying the Fed is data dependent and that the market is pricing a narrow band of outcomes. Basically, a higher for longer scenario unless disinflation becomes clear.
So in plain language, if inflation or jobs print hotter than expected, rate-sensitive sectors like banks and regional lenders could stay under pressure. If inflation cools, growth and cyclicals could get a lift.
Right. That's why we saw investors hedge into utilities and REITs today. Some are protecting duration and chasing yield while still trying to catch tech upside.
Breadth was mixed too. The Nasdaq 100 outperformed the S&P 500, and the small cap index lagged. That concentration in mega-cap growth is a pattern we've seen before.
Historically, sessions like this can precede broader rallies if small-cap participation returns. But if small caps stay weak, it signals risk concentration in a few big names.
Let's run through a few notable individual movers so listeners know what to watch next.
Taiwan Semiconductor Manufacturing Company headlines helped lift semiconductor sentiment. Analysts pointed to capacity and demand comments as a driver for related names.
Micron was on the earnings radar after previews put memory demand back in focus. Earnings and previews are front and center for tech.
Oracle and FedEx were also flagged in preview lists. Those reports could change narratives for enterprise IT and logistics when they come out.
Cannabis names like Kronos Group, Tilray, and Canopy Growth sold off on regulatory shifts. Again, policy moves matter a lot in that space.
Utilities tied to renewable deployment and grid upgrades saw inflows. And in real estate, industrial and logistics REITs showed momentum because of demand for distribution and data center space.
PayPal came up in analyst chatter. No headline today, but retail payment flows and cross-border activity keep fintechs interesting to watch.
A quick reminder, these mentions are observational. Analysts disagree, and outcomes will depend on actual earnings and disclosures.
Let's talk tactics, but not trading advice, just market context. If earnings and macro data align with cooling inflation and stable growth, the leadership could widen beyond mega-cap tech.
Conversely, any hotter-than-expected inflation or strong payrolls could reinforce defensive flows and keep financials under pressure. So, near-term direction hinges on that data and the earnings cadence.
What should listeners watch tomorrow? A few things. Micron, Oracle, FedEx results and commentary, plus any inflation or jobs updates and Fed speakers.
Also keep an eye on cannabis policy headlines and communications and media deal chatter. Those can create big one-off moves in smaller names.
And breadth, whether the Russell 2000 participation improves. A return of small-cap leadership would be an important signal.
Quick reactions, short takes again.
Earnings day. Eyes open.
Inflation prints matter a lot.
Watch small caps.
Totally. Okay, let's pull this into some clear takeaways for listeners.
Takeaway 1. The market closed mixed. The S&P 500 was up about 0.4%. The Nasdaq 100 climbed about 0.9%. And the Russell 2000 was down about 0.5%. That says leadership was concentrated in large-cap tech.
Takeaway 2. Tech and semiconductors got a lift from industry headlines and earnings previews, but banks and cannabis weighed on small-cap performance and added volatility.
Takeaway 3. Defensive and income-oriented sectors, utilities and select REITs, attracted flows as investors balanced growth exposure with duration and yield concerns. So there was tactical hedging in play.
Takeaway 4. The near-term path will be driven by upcoming earnings and macro prints, especially inflation and jobs. Those will shape rate expectations and determine whether rotation broadens.
And remember, this is market color and analysis for informational purposes only. Analysts note these are observations, not personalized investment advice.
Before we sign off, quick market mood check. Cautious optimism, but not full conviction. That sums up the session for me.
Yeah, cautious optimism. I like that. All right, final thought?
Keep an eye on the earnings calendar and incoming data. Those two forces will decide whether today's selective rotation becomes something broader.
Good note to end on. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for joining us on Alpha Recap. See you after the next close.